So we're doing two videos today. One is for the younger investor who is a long-term growth-oriented investor. And basically what we're saying in that video is, listen, if you've got 10 years till you need this money, today is a buying opportunity. I understand that it feels very different if you're 5 years out from retirement, if you're 60, 65, and you need this money, and you're starting to think, oh my gosh, should I just sell everything and wait for the dust to settle? So this video is for that investor who can't afford another 2008 50% drop in their investment accounts. I have to say that this particular market drop, which right now we're down about 20%, is not like the 2008 financial crisis for one key reason, and that's that diversification is actually working. So even though the stock market is down 20% from the very top, and depending on, I'm recording this at 10:30 in the afternoon or in the morning, I don't know what the market's going to be at the end of the day. So right now we're down about 20% from the top. The very key difference in this market turn down is that bonds are actually performing very well. So if you owned a diversified portfolio of bonds and stocks, yes, your stocks have gone down quite a bit, but your bonds have actually appreciated substantially since then, giving you a much more middle-of-the-road type return. So that's one thing that we can take some comfort in, is that even though stocks are down quite a bit, bonds have gone up, and you should definitely not be down as much as the stock market. Now, where does that leave us going forward? Do we, if we knew for a fact, let's say absolutely for certain, the market was going to drop 50%, and we're only halfway there, we're less than halfway there, would we get more conservative? Absolutely. We would get more conservative in a heartbeat and wait to buy those stocks back at 50%. The truth is we have no idea. The guys on TV don't know, the president doesn't know, the Federal Reserve Chairman doesn't know how far down the stock market's going to go. So all we can do is look at the cues, the clues, and what has happened in previous financial markets. Our opinion is that eventually this coronavirus scare is going to go away and the market's going to recover. Eventually, oil and gas prices are going to, one of the reasons the market's down so much today is that Saudi Arabia, it basically threw a little bit of a wrench in the global oil economy and said they're no longer going to suppress their production, which has caused oil and gas prices to come down substantially. So with that in mind, we don't know when that stuff's going to resolve, but we know eventually it will resolve. Saudi Arabia doesn't want oil prices low. Russia doesn't want oil prices low. The American producers don't want oil prices low, but they're having a little bit of a fight. They're playing chicken with who can withstand low oil prices the longest. This happens all the time. It happens every 10 years or so, and it's something that these oil and gas companies are very prepared for. So I didn't mean to get too much off on a tangent. What I want to tell you is there's a reason that the markets are dropping. And when these reasons resolve, the coronavirus, the oil and gas prices, typically the markets are going to recover. So if you are well positioned, if you've done a financial plan, we have some of your money in bonds, some of your money in stocks, this is not a time to panic and sell anything. We did talk about earlier in the month that we did reduce international exposure because we do think international investments are going to do a lot worse than American investments. But other than that, this is not the time. It's definitely a time that you can feel scared, you can feel nervous, but we're not going to take any action to try and panic and sell and buy things or sell things just because the market is down. If you have any questions, please reach out to myself, Blair, Richard, David, Tony, Michael. We're all here to help you. I've had a couple clients who just want to talk today after the market closes. We're happy to have those phone calls, but nobody here is freaking out. You've hired us for a reason, and right now is the time we're going to earn that money because we want to make sure that you make the right decision even though the market is down.